ultimate trading mastery rules for brand new investors to save you 10 to 20 years of learning curve. Welcome to our series again. My name is Aaron Sim. I want to share with you that I've still been trading for over 20 years. I've also realized that from my own experience, if you follow these 5 rules, it will speed up your learning experience. I wish I learned this thing many years ago. Let's get started. What is rule number 1? Rule number 1 is about winning mindset. Winning mindset. Winning mindset is trading is about 90% psychology, 10% technique. Let me say it again. It's 90% psychology, 10% technique. If you master your psychology, long term, you'll do well. Let me give you an example. It's important to be optimistic, positive about news of the market, because the market allows us to generate wealth. Okay? If you're so frightened of the market that something falls off, you're not going to make money, then you're not going to do it long time. So you've got to be positive about it. And anyway, the market has been around for over 100 years, has been around, and it's a great way to build wealth. Also, one thing very important is this thinking. It is not a zero-sum game. It is not a zero-sum game because zero-sum game means one win, one lose. Look at it, the market continue, the funds are replaceable and more money continue to pour in. If not more money to pour in, then what happened? It won't go up, right? The market capitalization continue to increase, more opportunity, more funds are in. So it's not a zero-sum game, definitely. 2. Now, also treat the market mentally as a business. Because if you trade a business, you become very serious about it. Then you make serious money. If you trade it like a hobby, you make a hobby money. Sometimes you make money, sometimes you don't, because you're not serious. As Warren Buffett says, an American successful trader says, be fearful when others are greedy. Be fearful when others are greedy, and be greedy when others are fearful. What does it mean? When the market is going up and a lot of people are participating, they don't care, the emotion's so high, they keep going in, buying and buying, and that's the time you better be careful. But when there's a big market drop, it's so fearful, so many people lost money and people are scared about it, that's the time you prepare to become greedy and move in. An example is this, like this year, back about end of February, market dropped like crazy, and then in a very short period of time, in March, it reverses and it's getting very stronger and stronger. Cool. Now also Warren Buffett says, stocks are still the best place to invest for long term. Stocks are still the best place to invest long term versus what? 30 years treasury bonds, for example. Invest like 30 years treasury bond plus also treasury bills, and even it's better than you put your money under your mattress. Is that cool? Okay, so that's number 1, winning mindset. Rule number 2, simplify your trading process. Simplify your trading process. Why you want to make it complicated? How to simplify your trading process? Don't make it complicated by reading tons of stock market related news, because whatever news, it is eventually going to be factored in very quickly in the stock prices. The stock prices already represent people's sentiment. That is a true gauge about prices. Okay? And usually, I can tell you, news are factored in to explain how the market works. Not necessarily true, okay? Not necessarily true. And that's why you be very careful about people's comment about stock market going up or going down, whatever, okay? So trade based on prices. So I'm not talking about being a technical analysis expert, although technical analysis has its role. I'm talking about instead of guessing which way the market goes, whether up, down or sideways, why not trade without a direction? Okay, why not trade without a direction? Okay, most people buy stocks, they can make money as it goes up. What happens if you can trade using stocks as an instrument, but still be able to make money whether it's up or down? That technique is using an instrument called options. Options, O-P-T-I-O-N-S, options. And if you'd like to find out more about options, contact me or my team later, okay? Now, so let's come back to that. So for brand new investors, I suggest you start trading without a bias of the market so that you allow the market to move, whether it's up, you make money, down, can make money. And also don't get hooked up about reading complicated charts. complicated charts. Also, don't read too much of financial news, and trading analyzing can be confusing. Focus on prices, focus on non-directional, focus on actually mastering the skill of simplifying your trading process. Is that cool? Okay. Rule number three. Before you put in real money, test the water. That's the word. Rule number three, test the water. Now, how do you test the water? There's this process called paper trading or simulated trading that allows you to test the technique whether it works or not. So you don't have to risk real money. How long? Do it for 90 days. Do it for 90 days. Test the technique that you have learned, non-directional preferably, and check that you do it on a weekly basis. Test it for a series of trade over 90 days, participate and learn from there. So how do you do paper trading? So when I mention to people, test it for 90 days, you know what people say? There are two types of reaction. First reaction is, why so long? How come I just can't use my real money to make money right away? It looks simple, right? Why not test out real money? Then I can feel it. I don't want to waste time waiting for things to happen. I want to actually make money right away. Now, what does it sound for that sort of person? It sounds that the persons are very, very impatient. They want to jump in straight away. Yeah, I think it shows that the person is also interested, but be careful because you have that kind of tendency where having impatient not to wait for things to happen in trading, that's not going to be a good thing. Cool? Second reaction that I got people say is, yeah, that makes sense. Test out for 90 days. Let me go step by step all the way. I'll track my results. I'm able to follow the rules. And then if my results over 90 days, I'll make money. Then I'll put in real money. In 90 days, you don't make money. It knows that something is not right. Then you know what? Change your process, check where it's wrong, and then start another 90 days. That's true, right? There's no guarantee. If you're wrong in 90 days, don't put in real money. Is that cool? So test the water, very, very important. Highly recommend that you do that. Cool? Number four. Four is a very, very big thing. So let's say after you test for 90 days, you get the results you wanted. And your account grow by what, 50%, 100%, whatever amount that your account grow. And you're very comfortable with the technique. You have a process, you have tracked your results, then put in real life capital to test. Now, how much to test? Now, real life capital, rather than you put in a small amount of money. Why? Because the more money you put in, the more risk you have. Now, sometimes also because we are more emotional when we put in more money. True? Test out with a small amount of money, maybe 2,500, 5,000, test it out first. Whatever money you put in, that kind of money is, if you happen to lose it all, you are okay. That's the rule. Okay, if you happen to lose off 5,000, you're okay. If you happen to lose off 10,000, you're okay. Okay, that is the rule. Don't go in and come to a stage that this is become your survival money. Okay, don't contest your life in that way. And then what you do, you track your results. Track your results to see how does it compare with your life, your paper trading. And apply this very, very important rule called the 50% rule. 50% rule. Whatever size of the account that you put in to trade, let's say we put in 10,000, then don't trade at any point in time 5,000. Let me say again. If you say for simplicity's sake, you funded your account with 10,000, don't trade more than half of that account, like 5,000. Why? So that you prevent yourself from over trading. And let's say your account go to 20,000 and you trade 10,000, okay, at any point in time. Okay, my mentor actually coached me and shared this important idea that way. She has a rule and we follow it religiously. Let's say your account is 10,000, you trade half of it, which is 5,000. You allow yourself to double that account 2 times. You make another 5,000. Don't increase, don't change it. Increase another 5,000. So from your 5,000, you make 10,000. And plus the 5,000 you already have originally in your account. So which means that your account is now 20,000 after 2 rounds. Then only you trade half the size of account. Don't run it so fast, okay? Whatever amount that you start, make it double 2 times before you start again. Cool? So let me repeat. trade with half the size of your capital, and that size doesn't double 2 times. So if it's 10,000, then what happened is make 5,000, make another 5,000, then only look at the total account now become 20,000, then trade half of it. Is that cool? Yeah, hope this helps. Number 5, major one, is called get a mentor to help you save to 10 to 20 years of learning curve. Now, I looked for mentors for a long time, and finally I found Marion McWilliams, who was referred to by my coach, and also found that actually she's really a real deal because she uses real money after testing her experience and to do it. Her method much simpler to do. Don't take me a lot of time to do it and give me a lot more consistent results. She's someone that I can relate to. I'm not a gambler to look at thousands of % return. So the bottom line story is to find a mentor that you can relate to, a trading personality that you find that is suitable for you. If you are an aggressive type and the mentor is not an aggressive type and you really want to be aggressive, then that's not for you. Okay, I generally like to find a mentor that give consistent result, track record over a long period of time, really do it, and use their own money. Okay, very important to use their own money, not just theory to teach. Real money and able to actually back up their results. Very, very important, because investing is investing. It is not gambling. Investing is investing. It's not gambling. And investing is to discover how you can make money work harder for you. So investing allows you to be trained to become an educated, savvy, unemotional trader. It's very important when you deal with money, you take the emotion out of the equation. So if at that time you're very, very emotional, you want to rush in, and don't trade, stay out for a day. Is that okay or not, right? And I say this, it's okay to learn from other people what not to do or their mistakes, and also learn from what they do. Is that cool? And if you like this presentation, please go to our WM YouTube channel and subscribe for it. WM channel, YouTube video, and subscribe for it. Good. And one more thing, if you like, comment and PM me or our team to help you this one. Share this video if you really, really like it. Turn on your notification. Good. I hope this series helps you. Go for it.